This is the Asia Train. I'm Shery Ahn in Tokyo.
And I'm Annabelle Rulers in Hong Kong. The top stories this hour. Asian stocks set to shrug off declines on Wall Street. Hotter than expected US inflation and a labour market slowdown amplifying debate on a potential Fed pause next month. The Bank of Korea expected to deliver its first rate cut in 4 years today as inflation eases and housing markets show signs of cooling. Plus, investors hoping for more than $280 billion in fresh fiscal stimulus from Beijing ahead of the finance minister's Saturday briefing.
We get you started with breaking news out of Peru. We are getting the central bank leaving rates steady instead of that cut that was expected by economists. And this, of course, as we had seen, the Peru Central Bank really managed to get inflation below that 2% level last month for the first time since 2020. But they've decided to leave the key rate unchanged at 5.25%. All of this as we continue to watch, of course, emerging market currencies. They've been really under pressure lately because of the U.S. dollar strength. We're talking about the longest rout in a couple of years already for EMFX. The U.S. dollar has really seen those gains, although in the overnight session we saw a little bit of pressure, and this to do really with two big forces that were at play in the markets. You're seeing U.S. futures right now not doing much at the open, but this as we had really hotter than expected inflation numbers in the U.S., but also a slowdown when it comes to the labor market with those jobless claims really rising to the highest level in over a year. All in all, we saw U.S. stocks falling, and the bond market seemed to have put more emphasis on the labor market data. We actually had Treasury yields falling as well. You can see right now that emerging market currencies are holding at that 1770 level, and we'll continue to watch the Treasury space as cash trading gets underway in Asia. But take a look at how we're setting up for the Asian market opens. We are continuing to watch the ASX 200 and, of course, Kiwi stocks as well after that RBNZ cut earlier this week. When it comes to right now, Nikkei futures pointing to the upside of 0.1%. We had a little bit of strength overnight on the Japanese yen, a lot of safe haven moves in that way. But right now we are continuing to see the weakness in the Japanese yen overall at around that 149 level. We watch the offshore yuan, of course, given that, Bell, we do have the finance ministry announcement on Saturday.
Yes, certainly so much expectation. What are we going to get from policymakers in Beijing? And is it going to be enough to impress investors, and some sky-high expectations going into that? But let's also bring it back to the U.S. inflation data, of course, higher than expected. We had that blowout jobs report from last week as well. So let's bring in our Bloomberg economist, Estelle O. And Estelle, again, that backdrop of the CPI print, the jobs figures as well. What does it tell us about where the Fed goes next? Because it's really that question mark. Do we see a hold or perhaps a smaller cut?
Yeah, sure, Annabelle. So to answer your question really quickly, it tells you that it's more likely that the Fed will still continue to cut by 25 basis points at their next meeting in November. And the reason for that is that even though the CPI print did surprise to the high side, the core PCE print, which is what the Fed actually targets, is actually still going to print rather soft in September. And the reason for that is the core PCE print takes some of the components from CPI and some components from PPI inflation print, which is due out tomorrow, and doesn't take everything that's from the CPI print into account when it looks at inflation data. So in other words, CPI inflation print came in hot, but a lot of the soft components actually go into the Fed's preferred inflation measure, and that's still going to print quite soft, and that's going to still give space for the Fed to cut by 25 basis points in November.
Yeah, and we had a lot of Fed speak overnight, and it seems most Fed officials seem to be shrugging that off. How much has that to do also with trying to figure out the state of the labor market given the jobless claims numbers?
Right. So definitely strong job numbers the prior month. But overall, the bigger picture, the bigger trend is that the labor market is still softening. You're still seeing hiring rates drop. You're still seeing quits rates drop. And until those two variables stabilize, you're going to still see a downward trajectory in trend or softening trajectory in the labor market. So that's what the Fed officials are still watching despite the hot September print.
So inflation dying but not dead, it would seem. What's the broader outlook then for these figures?
Yeah, so for inflation, we're definitely still seeing disinflation trends in the bigger components such as, shelter, but we are still also seeing a little bit of an uptick in goods inflation categories that previously had been showing more disinflation pressures. So the broader outlook is that we expect inflation to continue on a downward trajectory throughout year end, but we still expect it to be sticky. That's why we expect the Fed to, go at a slower pace from now on, and we're unlikely to see, the kind of jumbo cuts we saw in September, but we're still likely to see cuts going forward.
That was our Bloomberg economist, Estelle there. And let's get more on the US inflation print. Bring in our guest, Burns McKinney, Managing Director and Senior Portfolio Manager at NFJ Investment Group. And Burns, I know from your perspective, perhaps the CPI print has been taking a bit of a backseat to the jobs report, but is there anything in these latest figures that gives you room to pause and think?
Not particularly. I think that this is a report that, it was a slight surprise to the upside, but at the same time, for one, we've always, cautioned our clients to not necessarily read too much into one single data point and really focus on the underlying trend. And as the Bloomberg economist noted, the trend remains downward with respect to inflation. If you look at the last 3 and 6 months, the core CPI less shelter, that figure is still looking at about 1.5%, which is actually below the Fed's target. The primary factor boosting inflation continues to be shelter costs, and we know that that's actually something that's stale. If we look at real-time data with respect to shelter and plug that into the equation, it looks as though the core CPI is really pretty close to being at the Fed's target. And really the most important thing about today's print is how it would impact policymakers. And we believe that still shouldn't really change the planning or the trajectory for interest rate cuts, whereby the Fed is really more focused on the job side of the mandate at this point. And again, as it's been noted, that jobs are strong, but it is softening, and so the Fed should probably still continue to cut interest rates at a more measured pace going forward.
Even if we are sort of on that trajectory of cuts, though, where do you see the Fed ending up? Because it's that question as well of whether there's that sort of underlying inflation that will just stay sticky because of structural changes in the economy.
Yeah, that's a great point, and that's in many ways, what we say to our clients is that don't necessarily focus so much on what the Fed might do in November or December, but really look out at where they ultimately end up. So if I say I'm going to get to my parents' house at 5 o'clock, it doesn't matter whether I drive fast and have a lot of stops or I just go slow and steady. What matters is where you end up. And the so-called neutral rate, whereby it's not restrictive or stimulative. There's a lot of debate on that. A lot of economists are suggesting it's about 1% plus the longer-term rate of inflation. And you make a great point, and that's something that we tend to agree with. That whereas inflation, cyclically speaking, is coming down, but there are some secular factors that may boost it, such that the long-term Fed funds rate might end up coming back to like 3.5%, which is a little bit above the dot. Yeah.
I don't know if I buy into your driving a car analogy. If you go too fast, you can crash. That's the whole point of this perhaps no landing, overheated scenario if we continue to get a very, very strong economy, right? But when you look at the labor market data, why is it going across the board right now? What's happening with jobless claims rising and spiking? And then last week, we just had very strong job numbers.
Well, I think that when you look at, the September report is probably the one to focus on, whereby, if we look at the weekly jobless claims that also came out today, that figure is probably skewed a little bit by some weather-related disruptions. And so, again, focusing on the trend, we saw, despite the fact there had been some concerns that the Psalms rule might be triggered because unemployment has ticked upward, but it actually did pull back downward a little bit last month, and you're still looking at the unemployment rate of 4.1% is still really right in that range of what the Fed is traditionally considered to be full employment. So it is softening, but at the same time, it's softening from a point of strength. And so that's why when the Fed made their cuts, they weren't necessarily doing it because of as emergency cut measures, but rather from a point of being in a strong position, just really because the inflation adjusted rate had been so restrictive for so long. So they were trying to be proactive in that case with respect to jobs.
So while we're trying to figure out how fast the Fed will go in cutting rates, what are some of your favorite sectors? And also, I know that you have some specific stock calls as well.
Absolutely. One place that jumps out to us is the industrial sector. I think that's one of the places where when you think machinery, you think, this is the type of stuff that, when a central bank is cutting rates, lower interest rates help them. And industrials, that boosts them on a cyclical basis. But it's also a sector where you've been seeing some of the fastest dividend payout growth. And it's an area that just benefits from some longer term secular trends, whether it's infrastructure spending. I know that bill was passed a couple of years back, but a lot of that money is just going out the door. So between that, reindustrialization, as well as just in a world of geopolitical uncertainty, defense spending should all give a boost to the industrial space.
Yeah, we haven't even talked about oil right now, which of course we saw that jump overnight. Burns McKinney, thank you so much for your time. Managing Director and Senior Portfolio Manager at NFJ Investment Group. Coming up on the Asia Trade, we speak with the Daiichi Sankyo President and COO about their focus on the next generation of cancer drugs. Sanford C. Bernstein tells us why they're downgraded Indian stocks. Plus, it's decision day at the Bank of Korea. Morgan Stanley joins us to explain why they expect a policy rate cut. Much more ahead. This is Bloomberg. The Bank of Korea is widely expected to cut its benchmark interest rate today as housing markets cool and inflation eases below its target. Bloomberg Korea economist Hyo-sung Kwon joins us now for a preview. And Hyo-sung, are they finally going to do it? We were in Seoul for the August meeting thinking that they could potentially cut, and then they didn't. Is today the real deal?
First of all, thanks for having me. I expect the BOK to cut interest rate by 25 basis points to 3.25% at today's meeting, primarily to boost weak domestic demand, while exports have been performing well thanks to strong external demand for semiconductors. But private consumption and investment have been weak. High interest rate, one of the factors holding down domestic demand. And in addition, the Bank of Korea is now in good position to declare a victory against over the battle against inflation. Inflation is now below the BOK's 2% target, and it is expected to stay around 2% target next year. So with inflation stabilizing, the BOK will recalibrate its policy stance to support economic growth. So far, rapidly rising housing prices in Seoul and growing household debt have been holding back the BOK from cutting rates. But tighter regulations by the government shows potential to curb house price gains and household debt growth. So I think I believe that the board members will think it is safe to cut interest rate at today's meeting.
Hyo-sung, do you think there's going to be unanimity, though, in that decision? Because to your point around household debt levels and housing prices as well, some might want to see more data first.
Yeah, I think, so even if my baseline view is that there will be BOK will cut rates today's meeting, to be honest, I think there will be about 30% of chance BOK holding off today. So, I think most members might favor a cut today, but I guess it is possible that at least one member would wait for clearer signs that of cooling housing market in Seoul and slowing household debt. If that's the case, there will be a dissenting vote, and it's going to signal of ongoing concern about the financial stability among the board members. And I think that it's going to contribute making a potential rate cut today a hawkish pivot.
Our Bloomberg career economist, Hyosung Kwon there. And you can also turn to your Bloomberg for more on the BOK decision that could come in the next hour. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. And of course, the other big story investors are watching for is what's happening in China. And investors, analysts alike are hoping for as much as $283 billion in fresh fiscal stimulus from Beijing to shore up the economy and boost confidence. That's the view from a new Bloomberg survey ahead of the briefing tomorrow from the finance minister. Let's bring in our China correspondent, Min Min Lo. And Min Min, I mean, to say that a lot of people are watching out for this is probably a bit of an understatement. I mean, there's a lot of expectations around this meeting tomorrow. What else are we going to be watching out for?
Yeah, so Bloomberg did a poll of 23 market participants, and the consensus now, everybody is expecting about 2 trillion yuan in a fresh fiscal package, although we have 4 participants expecting 3 trillion yuan and above. And also, if the MOF briefing disappoints investors and doesn't give us anything new, economists are expecting there could still be a fresh stimulus sometime within the next 6 months. But what's key to watch, though, is the composition of that package, right? Because China has for a long time been relying on infrastructure investment to lift growth, but that has become quite saturated, so it could see diminishing returns. So everyone is looking out for what sort of consumption measures, because that's the key drag on the economy. So take a look at the screen. Some of the measures we're looking out for: consumption vouchers, subsidies for consumer goods and cars, for the elderly and the poor, support for families with children, greater social safety net, and also when it comes to property measures, whether the government will relax those curbs on the special government bonds to allow those funds to be used to buy up unsold homes. So quite a lot to look out for. But again, the bar is very, very high, because any revision to fiscal stimulus will likely have to be approved by the legislature as well. So it's unclear whether the MOF will announce all of that over the weekend.
Yeah. But right now, when we're looking at the state of the Chinese economy, it's quite clear that a lot needs to be done in order to stimulate demand, right? We are getting the inflation numbers this weekend, and that's not looking pretty either.
Yeah, inflation is also not looking very pretty, because for September it's expected to be at 0.6%. That means it's the 19th straight month that is below 1%. Producers' price index also expected to extend further declines for a second straight month. It's already been in the negative territory for close to 2 years now. So this deflationary spiral is still continuing, and that's why economists has been calling for more fiscal spending, which, by the way, has been a drag on the economy. Broad fiscal spending had shrunk by 3% in the first 8 months of this year, and that is partly because of lower government revenue as well, because of the weakness in land sales, which is a key source of government revenue. And so all eyes is on Saturday on whether the government will deliver the fiscal package that investors are looking out for.
All right. A lot of anticipation around that meeting tomorrow. That was our China correspondent there, Min Min Lo. And some of the geopolitical stories that we're tracking this morning. Chinese Premier Li Qiang has urged Japan to keep bilateral relations sound and steady as tensions simmer over the murder of a Japanese schoolboy in Shenzhen. Li was speaking after meeting Prime Minister Shigeru Ishiba at the ASEAN summit in Laos. State media quoted the Premier saying relations that are at a critical stage of improvement and development. The WTO says global goods trade will grow less than initially forecast next year due to geopolitical risks and political uncertainty. The Geneva-based organisation now sees trade growing by 3%, less than the 3.3% growth seen 5 months ago. The WTO says risks to the trade outlook are now firmly on the downside. Republican presidential nominee Donald Trump says he wants to boost the U.S. auto industry by making interest on car loans fully tax deductible and renegotiating a trade deal with Mexico and Canada. He was speaking in key swing state Michigan, the traditional home of the US car sector. Trump also says he would ban Chinese self-driving vehicles from American roads.
The autonomous vehicles, we're going to stop from operating on American roads. Remember this, I will close the loopholes under Biden and Harris that are beginning to allow Chinese vehicles to creep into American streets.
Officials in Florida are beginning to assess the devastation left by Hurricane Milton. At least 10 people were killed as the storm hit, and more than 3 million people lost power. ABC News reporter Jacqueline Lee joins us now live from Tampa. Jacqueline, what's going on today?
Shery, you can see just how powerful Hurricane Milton was, ripping off this fiberglass roof here at Tropicana Field, which is home to the Tampa Bay Rays. That roof was meant to withstand wind gusts up to 115 miles an hour. And we know winds clocked St. Petersburg at 101 miles an hour. And what's most interesting about this destruction is earlier, before the hurricane, there were more than 10,000 responders and operations that were supposed to be as part of a base camp ahead of Hurricane Milton. And we heard from the governor earlier this morning that they ended up moving the base camp because of the forecast. Well, thank goodness they did, because as you can see, this destruction here. And also, you know, we were staying in downtown Tampa when we spoke with you last night. All the bridges were closed, but they did open this morning. That's how we were able to get over here to St. Petersburg. And all along the way, we saw trees uprooted, tree branches everywhere. There's just a lot of cleanup to be done. Shery.
Jacqueline Lee, that was an ABC correspondent on the ground for us. Thanks so much for those insights and colour from on the ground. But we'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how the Topix Pharma Index has been performing so far this year. Gains of more than 16%, outpacing the broader Topix. We've had Otsuka, for example, hitting a record high just in the previous session. And we're also getting some earnings. Hisamitsu Pharma, for example, beating expectations in the previous sessions. We are looking at Daiichi Sankyo as well. Gains of 30% year to date. The U.S. earlier this month moving to fast track a breast cancer drug developed by Daiichi Sankyo and AstraZeneca for wider use. And HER2 was granted breakthrough therapy designation after promising data from a phase 3 trial. Joining us now is Hiroyuki Okuzawa, President and COO at Daiichi Sankyo. Thank you so much for joining us this morning.
Good morning.
So let's talk a little bit about HER2. It's been doing very well. It's one of the types of ADC drugs, which are the next generation targeted cancer drugs that you're really focusing on, right? What are your expectations for your revenue forecast that you gave earlier? Because that was around 500 billion yen. Could you surpass it?
Yeah. So HER2 continues to be a growth driver of Daiichi Sankyo since the launch in the fiscal year 2019. It has been growing nicely. And for this year, fiscal 2024, we are on the way to achieve our forecast of HER2 sales above 500 billion yen.
So if you surpass it and demand is still high, do you have enough supplies at this point? What are you doing to mitigate that?
Sure, of course. Our supply chain team is collaborating both our internal manufacturing sites and also the external so-called contract manufacturing organization. And we are expanding our internal manufacturing capability not only in Japan, but also in Europe and United States. So altogether, internal and external, we are securing the strong demand.
I want to ask you about those investments, but first, are you also planning to expand some of the types of cancers that this drug could potentially target?
Yes. So our main stream is ADC, that is antibody drug conjugate. And we have our unique DXd ADC technology that our researchers in Japan discovered. This is a kind of platform technology. So that means that with using this DXd ADC technology, we can produce a series of the products. And we have now 6 DXd ADCs, including Enhertu as the first one.
That one of those drugs, Dato-DXd, HER3-DXd, AstraZeneca was saying that some of the trials had been muddled, the results, when it comes to treating cancer. How do you respond to that?
So in case of Dato-DXd, we just announced the result of the Tropion-Lung01 study very recently. That is for the overall survival data. And that OS data showed the clinically meaningful trend in improvement of OS. So with this data, we are sharing the data with the relevant authorities and discussing the potential use for the future.
When it comes to dealing with regulators, we have seen, for example, U.S. regulators becoming a little bit more careful and scrutinizing some collaborations with Chinese companies, for example. Are you seeing that in your business?
So I would say in case of Daiichi Sankyo or AstraZeneca or Daiichi Sankyo, US Merck, we have such a strategic alliance, but there is no negative impact so far we are seeing.
So the investments that you're making in the U.S. would not be affected. Would the investments be affected by the fluctuations of the yen?
Yeah, the exchange rate has an impact to a certain extent. But since we are a globally operating company, the exchange rate effect is, let's say, neutral. Although our global sales outside of Japan is getting higher and higher. So the weaker yen has a positive effect in that sense. But we also spend a lot of money outside of Japan.
Right.
So therefore, the bottom line is a neutral.
It's neutral.
Yeah.
How much of that growth and demand is coming from China?
The China's demand is very strong. See, because we are focusing on the oncology business, the China has the biggest patient population in cancer. So that is why we expect the demand for our ADC product from China will be further increasing.
How big is China for you? I see rest of the world 12% of your revenue.
Yeah.
How much is China for that?
Yeah, the among that rest of the world sales, almost 50% is coming from China.
Oh, wow. Do you find a lot of competition with other Chinese pharmaceutical companies?
Oh, yes, yes. With multinationals and with local Chinese companies, there are fierce competition there. But we are partnering with AstraZeneca, for example. They are #1 company in China local market. So we have got a strong partner.
When it comes to Japan, what is the potential of this market, especially when it comes to dealing with regulations and demands for price cuts?
That is a kind of headache for our pharma industry in Japan. So, you know, every year we have the price cut, and this trend seems to be continuing. So therefore, we are arguing to the government that on one hand, we need to secure Japan's healthcare system with full reimbursement. That's nice. But on the other hand, we need to foster the science enhancement on the other hand.
Hiroyuki Okuzawa, good to have you with us here in the Tokyo studio. He's the president and CEO of Daiichi Sankyo, talking to us through the pharmaceutical industry. We have more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and the Bank of Japan deputy governor says the central bank will stay on its path of rate hikes and unwinding easy policy if the economy performs in line with projections. Ryozo Himono's comment is the first by a board member since new Prime Minister Shigeru Ishiba warned against another rate hike. Himino told a Bloomberg event in Tokyo that the BOJ can improve its communications after its July rate rise surprised traders.
There is no silver bullet in better communication. Each approach comes with pros and cons. And I would say that there is no clear consensus yet among board members about which approaches to pursue. But I can testify that there is a strong will among us to learn from what happened and continue to try to do better.
Also at the Bloomberg event, former BOJ Deputy Governor Masazumi Wakatabe welcomed his successor's data-dependent approach to policy. He joined a panel discussion with former BOJ Executive Director Kazuo Moma and JP Morgan Securities' Rie Nishihara.
Now Japan is at a critical sort of juncture. So we are at the sort of the critical phase, going from moving away from deflationary, stagnant Japan to newly emerging sort of mildly inflationary, growing Japan. So that's why you are here. That's why you are trying to sort of report what's going on in Japan. So that's my general point. I think for specific points about the totality of economic data, I think, you cannot, argue against that totality because as a former deputy governor of the BOJ, the communication is very, very tricky. Yeah, suppose I say, that's, I'm just looking at the inflation expectations. Then, the people just take a look at market participants will focus on inflation expectations. But I think that he has given us some hints. And we are going to talk about the future course of the BOJ action. My sense is that, Himino-san is confident about BOJ's predictions. Okay. It's right or wrong. So that's the big question. Yeah.
So it's really interesting, even during his comments, he even mentioned the pass-through of the level of the yen into the inflation outlook and into what the BOJ is going to do, right? So let's sort of try to gauge where at least private markets and investors think that the yen will go. Nishihara-san, you want to take us there? What is JP Morgan's view, for example?
Yes, JP Morgan expects dollar yen. Farthest is September next year is 139. So it will be like something like 138 and 25th. 25 end is the point all market focus because by then Fed's rate cuts will be mostly done. So now today, that in forward curve, the dollar yen pricing in at the end of 25 is 142. And on the date of sell-off on August 5th or mid-September, when Japan equity markets face challenge, the Nikkei was 36,000 at the time. The dollar yen in the market and 25 is 135. 134. So today, the market gets, much better in terms of the sentiment. We had preemptive FRB, the Bank of Japan's communication sounds like very dovish in September. The communication is tricky. So we had a good US payroll, right? So dollar yen matters. And looking back at equity markets after July 31st, we are actually coming back to the same level. 40,000 Nikkei today closing level is exactly the very close level before the July meeting of the BOJ.
Which, of course, wreaked havoc to yen carry trades, and then we had the yen really soaring. But really, Moma-san, let's talk a little bit about the importance of the currency for the BOJ, because even in their statement last time, they said that it would have more of an impact than before.
Yeah, actually, Himino-san earlier didn't tell anything about exchange rate. That is the dishonest, actually. What actually found out very interesting in the last press conference by Mr. Ueda, Governor Ueda, September meeting, actually he said U.S. economy 17 times in a 60 minutes conference. So every 4 minutes, he said U.S. economy. He is talking about Japan's monetary policy, but he still reveals to prefer actually mention U.S. economy. That's exactly revealing how much BOJ is concerned about the external development, which could affect exchange rate. Actually, a July rate hike was motivated by very weak yen. I think probably 80 or 90% of the motivation was weak yen at that time. So since then, after the August turmoil, BOJ suddenly changed the tone. Don't wonder, because the yen was 140. So now the yen is approaching to 150. So I think that will put BOJ in a very delicate position going forward. So if the yen further weakens, 150, 155, and people are starting to complain about the weaker yen and higher prices, I think that will actually prod the BOJ to move forward the timing of the next rate hike.
Some of the views from our Bloomberg event navigating the new Japan in Tokyo. Take a look at how the yen is trading at the moment. Pretty steady after we saw some gains against the US dollar in the overnight session. A little bit of that safe haven sentiment really filtering through the markets. But still, pretty weak against the US dollar given recent trends. We're talking about that 149 level and pushing towards 150. We are expecting to see potentially a little bit of a pop at the open in the Nikkei. We're close to that 40,000 level. We'll be watching the euro as well. It's been really narrow trading, range bound this week because we do have the ECB decision next week. And of course, the offshore yuan given the press briefing by the finance ministry on Saturday. You can watch any of our past conversations. You can also watch us live. TV Go is your function. You can dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
Well, Tesla's looking pretty flat in after-hours trade. This is ahead of the EV maker's unveiling of its long-awaited driverless Robotaxi prototype. Our tech reporter and co-host of Bloomberg Technology, Ed Ludlow, joins us now. And Ed, we know that Elon Musk is making very big promises in this space, and he's also made big promises and kind of failed to live up to the expectations in the past. But is this time going to be different, do you think?
I mean, in the context of cars that can drive themselves, robotaxis, that has been the story for years. I think this is going to be a very significant event based on the reporting that we've done of what they'll unveil. In simple terms, a robotaxi, a purpose-built, designed product. And, you know, for the investor base on Wall Street, the retail investor, or anyone tuning in right now around the world that is less familiar with Tesla, it's a company that sells electric vehicles to consumers, but the pitch for the future is it's a company that operates a ride-hailing service through an app that is something like a hybrid between Uber and Airbnb, and it's really hard to see the jump to how they get there. Maybe we'll find out how tonight.
Not to mention that they're also developing a humanoid robot. What else can we hear from Musk?
Yeah. You know, it's so hard to piece all those things together, right? At the core of it is AI, unsurprisingly. But actually, Tesla does have a deep bench of talent and competence in artificial intelligence. They're very good at custom silicon and hardware. They have very talented software engineers and computer scientists. There are traits that are common to both ambitions, both Robotaxi and Optimus. I suspect, based on the teasers, we'll hear a bit more about that. For you guys in your audience as well, I think the thing that the market might dwell on is less the physical and more maybe the regulatory. And I suspect we pay close attention to what Elon Musk says about the future of self-driving and autonomy in China in particular, because it's such a key market.
Yeah, and we've seen Tesla sort of making some inroads there. But on the regulatory front, I mean, they haven't even submitted the application yet in the US, is that right? So is this sort of putting it pretty far into the distance?
Yes. I mean, the basics, why is Tesla holding this splashy event on the lot of Warner Brothers in Hollywood? because it's private property. They don't require permits to run a purpose-built robotaxi. So I expect demos for those in attendance. But they cannot do so on public roads. There are lots of questions to be answered. And by comparison, Waymo, which is Google's autonomous driving unit, it's out there in cities, real autonomous driving on public roads. Tesla is taking a different roadmap to get there. And that's the bit that investors have to decide on. Do they see the jump from training the software full self-driving where the consumer car uses it to the future of having a purpose-built robotaxi? And I'm interested to see the presentation.
I mean, Elon Musk has sort of put a lot of resources into this effort, and he's foregone things, for instance, like pushing forward with a cheaper vehicle, for instance. We're still on track, though, for the first ever annual sales decline for the company. So do you think that the promise of Robotaxi is going to be enough to sort of assuage any investor concerns?
EVs are more commonplace. There are more brands. They are more available around the world. And Tesla no longer is unique in that respect. So the self-driving and AI competence differentiates them, right? We did clarify in a report that Donahoe and I put out some months ago that a cheaper EV is not scrapped. But what they did was they took the engineering work for a cheaper EV, and instead of having a brand new dedicated model, which we may well see tonight, we just don't know, they worked out how they could make their existing lineup cheaper. And that is kind of consistent with what Musk has talked about. But at the end of the day, they're pitching us on a future where they don't sell cars to consumers anymore, at least far into the future, because they want to operate a ride-hailing service based on a fleet of vehicles that they own and operate themselves, a robotaxi or former lease vehicles. And it's really hard to piece all this together. All I can say is just bear with us, and when we have the information, we'll report it for you.
Yeah, can't wait to see, Ed, what you pull out from that event. So kicking off as well at 7 p.m. California time, Warner Brothers movie studios near Los Angeles. That was the co-host of Bloomberg Technology there, Ed Ludlow. We'll have more headlines as well on the corporate front. BlackRock and Singapore's sovereign wealth fund GIC are said to be among bidders for stock in Hyundai's India's $3 billion IPO. Sources say the record-breaking listing is also attracting other local and international institutional investors. The price range for the IPO has been set at around $22 to $23 a share, with the parent company selling over 140 million stock. Seven & I has unveiled a plan to split in two in a bid to fend off an unsolicited takeover offer from Canada's Couche-Tard. The restructuring comes with the core convenience store business weakening. Seven & I on Thursday cut its full-year operating profit outlook, citing the effects of inflation on mid- and low-income shoppers. Uniqlo parent company Fast Retailing posted full-year operating income that beat estimates thanks to growing demand globally. Guidance for 2025 also topped analyst expectations. The Japanese retailer expects another year of strong revenue and profit growth from North America and Europe, offsetting a slump in China, where sales have dipped over the past 2 quarters. AMD suffered its biggest stock decline in more than a month after it unveiled new AI chips at an event in San Francisco. Investors had also been hoping for new information on customers and financial performance. The stock remains up 11% this year. AMD has emerged as the biggest contender to Nvidia in the lucrative market for AI processors. But AMD CEO and President Lisa Su tried to reassure investors and says she's optimistic about demand for the industry.
This is an incredibly fast-growing market. I mean, if you think about, what we've done just over the last 12 months or so, we've seen MI300 demand increase from when we started the year to, in our most recent earnings, we actually said we would be over $4.5 billion in this important AI accelerator market.
Take a look at how we're setting up for the Asian session. We are seeing the ASX 200 down at the moment, being dragged down by real estate and financial companies. Energy, one of the sectors that's gaining ground at the moment. We have energy shares also leading the gains in the Wall Street session, with oil prices surging and rebounding after 2 sessions of losses. And you can see U.S. futures not doing much after falling from that record high. Of course, we had contrasting data, whether it was really higher than expected inflation or that slowdown in the labor market. Nikkei futures pointing to the upside, 0.3%. And of course, we have the big one today, the Bank of Korea rate decision in the next hour. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after some losses on the Wall Street session. Really, Bell, investors trying to figure out what to make of higher than expected inflation numbers, but at the same time, U.S. jobless claims really jumping to the highest in over a year. What that means for the Fed and what it could potentially mean for central banks across Asia. We have the Bank of Korea rate decision today.
Yeah, could get that first cut. The BOK is due this hour, so certainly one to watch. And of course, that countdown to the China briefing tomorrow. What are we going to get in terms of fiscal stimulus announcement? Because we're certainly seeing a lot of volatility around that, and perhaps investors moving back to mainland markets. But the BOK, of course, the big focus.
Yeah, could we see some flows out of other Asian markets is a key question right now as we're expecting that finance minister briefing, right? Take a look right now at how Japan is coming online, because we had a little bit of strength for the Japanese yen overnight. It was really to do with those safe haven moves, given, of course, the conflicting sort of data and narrative that we got out of the U.S. economy. Right now, we're seeing the Nikkei gaining about 0.5%. Do watch out for those stocks that actually released earnings yesterday. We're talking about fast retail, also 7&I as well. Take a look at how the Kospi and the Kosdaq are coming online, because of course it's all about the Bank of Korea again and the state of the Korean economy. We are getting the trade numbers for the first 10 days of this month. Exports rising 33% year on year, and really chip exports, of course, taking a big chunk of it, rising 45.5% year on year as well. We have imports also gaining, trade deficit coming in at $2.16 billion, but really to do with the state of the Korean economy and perhaps the fact that we are seeing domestic demand continue to be an issue, that we could get the Bank of Korea to finally move for the first time since early 2023. Our next guest says emerging markets tend to outperform developed markets during a U.S. rate-cutting cycle, irrespective of whether we get a soft or hard landing. Let's bring in Rupal Agarwal, Asia quantitative strategist at Sanford C. Bernstein, who joins us now from Singapore. Rupal, what happens if it's not even a hard landing or soft landing, or there's no landing at all, and those expectations of rate cuts continue to get delayed? What does that mean for Asian markets?
Hi, good morning. So I think what it means from an Asian market standpoint is a lot more volatility. See, clearly the markets so far has been pricing in a reasonably aggressive rate cut environment, which to some sense is basically being pared down because of some of the recent data points. So it does mean a lot more volatility in the region.
Are there specific markets that would outperform in this rate-cutting cycle coming from the Fed? Of course, we are expecting that rate cut from the BOK as well.
So typically, historically, what we've seen is, if it's a soft landing aligned with a rate cut cycle in the US, that usually historically has been much more positive for markets like Korea and your broader ASEAN region. So those have been the big, pockets where we have seen a lot more outperformance relative to some of the bigger markets like, say, Taiwan, China, India. Historical evidence is not really very supportive for some of the other bigger markets.
Rupal, what do you think is going to be the bigger driver, though, for equities in this quarter? Do you think it's the story around the Fed, or do you think for Asia specifically, is it the story around China stimulus and the move that we see back into equities there?
I think for Asia, it's a mix of both. But in the absolute near term, I think China clearly is the key focus because if that, delivers what investors are expecting, then I would say that it further helps in the broader EM trade. We have so far not really seen the kind of flow that one would expect in a typical US rate cut cycle. So essentially, the regional flow is being rotated within the markets. We are not really seeing too much of fresh capital, but China could definitely help it.
And of course, Chinese equities, I mean, valuations are still very cheap, especially when you compare it to the likes of India. What is the sort of upside that we can see from here?
I think we still remain tactically overweight on China. It's more from a risk-reward perspective. Yes, valuations have come up, but most of the indices in China are still at long-term average levels. So we do think that there is reasonable upside on a valuation front. I would just say that I think there needs to be a little bit more patience when it comes to China market. The expectations tend to, shoot up quite significantly in a very short period of time. And that is exactly what we saw. And hence, we've been seeing a fair bit of volatility. But I would say that it's not just, valuations, but also equity risk premium has been falling. That again brings, a little bit of support to the broader market. Earnings revisions is something that we would definitely want to start, seeing some meaningful upside. We haven't really seen anything so far, except for maybe financials, where there is still some earnings recovery. So that's probably one fundamental support which is lacking, which could eventually play out, if they deliver on the fiscal stimulus that markets is expecting.
Rupal, I've started to hear these concerns, given the expectations, as you say, whether really, whether really we can believe those expectations on the further Chinese market rally. I've heard these concerns about potentially pulling away the flows out of Asia and other smaller markets. Is that a risk?
See, that is what we have been seeing since China market came back. A lot of the flow sort of started getting redirected out of pretty much every single Asian market into China. So that clearly remains a key risk for some of the other markets. But I do think that, once the initial sentiment sort of, comes down, we would start seeing even some of those smaller markets going back. Because fundamentally, if you look at from a growth standpoint, if you look at from valuation standpoint, I do think that broadly ASEAN region doesn't really have a risk. And the fact that if you really want to position for a US rate cut environment, then you should be in some of those markets.
How are we expecting Japan to perform when the Fed is cutting and Japan is actually normalizing and hiking rates?
I think for Japan, it really depends whether it's a hard landing or a soft landing. So hard landing is actually quite bad for Japan, tends to be, extremely sensitive economic-wise as well as market-wise. But if it's a soft landing rate cut cycle, then it ends up delivering returns. Relative basis, it does very well. So the point being that if it's a soft landing US rate cut environment, it's essentially time to add more international exposure, and Japan is basically part of that mix. Near term, of course, there still remains reasonable uncertainty around the broader political dynamics within Japan, as well as, of course, the broader geopolitics that we are seeing globally.
Do you expect to continue to see some volatility around the yen carry trade? It seems, given the direction that both central banks in the U.S. and Japan are going, that those yen carry trades are looking attractive again.
I think so far we've not seen too much, and I don't expect a significant risk being built up on that front, at least in the near term, given that there is less expectations of any moves by BOJ in this meeting. And even on the Fed front, we are starting to hear narratives around potentially a pause, which means that, yen is likely to be, sort of range bound. So I think carry trade from that perspective still looks attractive.
Rupal Agarwal there, Asian quantitative strategist at Sanford C, Bernstein. Thanks so much for your time this morning. And we are just under 10 minutes into the session so far for equities in Japan. and also Korea here. But at the start of the day, this is what we're seeing in particular. Some of the movers, Seven and I, the big focus here, because, of course, we've seen the company trying to fend off that takeover or buyout proposal from Couche-Tard in Canada. What they've done now is detailed plans not only to rename themselves, but also to shed dozens of non-core businesses. So that acceleration of restructuring efforts. So they've cut their operating profit outlook for the 12 months through end February to $2.7 billion. They're seeing weaker sales at convenience stores, and they're also spending on new initiatives. That stock under pressure today. Fast retailing, different story or different theme out of the earnings. We actually saw higher sales, particularly from the Western markets, North America, Europe, and so we saw them lifting their operating profit target for the full year to 530 billion yen. That stock there just fractionally higher. Kansai Electric, another stock that we're watching this morning, they're halting one of their reactor units after they found a tiny hole in a pipeline. That's down 0.6%. And then as well, Matsuya, we had their half-year group earnings results. And we are just seeing that stock just a little higher this morning so far. But we'll have more ahead on the Asia trade. This is Bloomberg. China investors and analysts are hoping for as much as $283 billion in fresh fiscal stimulus from Beijing to shore up the economy and boost confidence. That's the view from a new Bloomberg survey ahead of a briefing tomorrow from the finance minister. Let's bring in our China correspondent Min Min Lo for more on this. And Min Min, sounds like a lot of fiscal firepower, really. Are we likely to get it? And what else are people going to be watching out for, do you think?
Yeah, it's pretty mixed right now. According to the Bloomberg survey of 23 market participants, the consensus now is that the government will roll out 2 trillion yuan in new fiscal stimulus. But there are 4 people who think that it will be above 3 trillion yuan, and our Bloomberg economics team believes that there will be no fresh stimulus at all. And markets was also pretty split yesterday. If you look at the CSI 300, it was struggling to find direction, although it ended the day in the green. But of course, it's not just the scale of that fiscal package that we're looking out for. It's the composition of it. How much of it is going to be directed at stimulating consumption as opposed to the usual playbook of supply side intervention that we've been seeing so far. So investors are specifically looking out for consumption vouchers, for subsidies for the poor, for families with children, consumption vouchers or subsidies for household appliances, and also whether the government will relax those curbs on special local government bonds to use those money to buy up unsold homes as well. So economists are really hoping that the government is going to take serious measures to steer the economy away from that two-track recovery, to stop over-relying on exports to drive growth.
Yeah, and to your point, I mean, there's sort of a high chance that people end up getting disappointed from these numbers or whatever's announced tomorrow, especially when you consider fiscal spending has been a drag this year.
Yeah, it has actually shrunk in the first 8 months of the year, and really falling far below the budget. So Bloomberg Economics is saying that only 55% of the budget this year has been spent. So the priority for MOF on Saturday could possibly be just to get all these unspent funds allocated first. And the next thing they might do is to move forward allocations from next year's quota of special sovereign bonds and special local government bonds. Move that forward to this year. That means forward planning, fundraising for the related projects can start this year, although spending will likely only take place next year because we're already in mid-October and there's not a lot of time left.
No wonder we're expecting inflation data to again appear pretty muted when we get them this weekend.
Yes, so inflation is expected, consumer price inflation is expected to be 0.6% for the month of September. This means that it's 19 straight months that we're seeing now of inflation falling below 1%. And if you take a look at the producers' price index, that's expected to extend further declines for a second straight month. And it's already in the negative territory for close to 2 years now. And that's partly driven by falling commodity prices, that sell-off that we have seen before China China announced that big stimulus. And it's not just prices, there is wages as well for the third quarter falling by 0.6%, according to an online recruitment platform, Zhaopin. And really year to date so far, it's just been on a downtrend and worsening that deflationary spiral that we are seeing. And so that economic stimulus on the fiscal side, that is more urgent than ever.
Bloomberg China correspondent Min Lo there. Now, these are some of the geopolitical stories that we're following as well. Chinese Premier Li Qiang has urged Japan to keep bilateral relations sound and steady as tensions simmer over the murder of a Japanese schoolboy in Shenzhen. Li was speaking after meeting Prime Minister Shigeru Ishiba at the ASEAN summit in Laos. State media quoted the premier saying relations are at a critical stage of improvement and development. The WTO says global goods trade will grow less than initially forecast next year due to geopolitical risks and policy uncertainty. The Geneva-based organization now sees trade growing by 3%, less than the 3.3% growth seen 5 months ago. The WTO says risks to the trade outlook are now firmly on the downside. Republican presidential nominee Donald Trump says he wants to boost the U.S. auto industry by making interest on car loans fully tax-deductible and renegotiating a trade deal with Mexico and Canada. He was speaking in key swing state Michigan, the traditional home of the U.S. car sector. Trump also says he would ban Chinese self-driving vehicles from American roads.
The autonomous vehicles are going to stop from operating on American roads. Remember this, I will close the loopholes under Biden and Harris that are beginning to allow Chinese vehicles to creep into American streets.
A senior State Department official says the U.S. faces an urgent need to diversify supply chains away from China because of what he calls predatory pricing. The Undersecretary for Economic Growth, Energy and the Environment told us Beijing's policies will eventually drive up prices worldwide.
What we are seeing only reinforces the need for us to diversify supply chains. China controls, in many cases, 95% of some of these critical minerals, graphite, to use an example. What does a monopolist do? Well, you learn that in law school. They do predatory pricing. They lower the price so that the competition is wiped off, and then they can raise the price. That's what we're seeing now. And so part of the challenge, I think, for us as governments, and the Europeans face the same issue, and we face it as well, is we've got to help our companies. We've got to find a way to help our companies hang on, because everyone tells us that by 2030, a lot of the price plummeting that's going on now, you will see increases, price increases, because demand will continue to rise. So, yeah, it's an issue, and we are working together with the Europeans, and because it's a common problem, to find ways to ensure that we diversify our supply chains.
Expand on that. How, though, and where?
Well, in many ways. But the one that I personally have been very involved in is creating a partnership of 14 countries, plus the European Union. We comprise about 55% of the world's GDP. It includes Canada, Australia, the EU as a whole, a number of European countries as well individually. And what we're trying to do is we are sharing information about projects. A lot of what has been happening in the critical mineral space is that we don't learn about projects. It's a very opaque market, and it's a market where getting information and getting actionable information is important. So we're sharing the information. We're working together on doing co-financings. Some of these projects take billions of dollars, and not one institution can't just do it by itself. So sharing information, financing, also doing financings together. And also, our calling card with countries is to convince them that we will work with communities, we will work with countries, we will bring technology, we will observe labor laws, we will comply with environmental legislation. We won't make countries choose between environmental degradation and economic growth. So we'll do things right. We'll follow the right ESG principles. And what that does is basically provide an alternative, because what's been missing in the critical mineral space for many years is an alternative. It's really been, we have allowed China to control the playing field.
U.S. State Department official Jose Fernandez speaking with our colleague Kriti Gupta. We have more ahead on the Asia trade. This is Bloomberg.
Well, AMD suffered its biggest stock decline in more than a month as it unveiled new AI chips at an event in San Francisco. Investors had also been hoping for updated information on customers and financial performance. CEO Lisa Su told us more about the new product pipeline.
It was a big day for us. We talked about so many new technologies. We launched a number of new products. We launched our new 5th-gen EPYC server product called Turin. We launched MI325 and talked about our future roadmap and MI350 and beyond. We talked about AI PCs and networking. So it's been a great day. As it relates to, MI325 and what we're doing in the data center accelerator market, I mean, this is such an exciting market right now. There's so much demand overall for new AI capability, and we are doing extremely well. We had a number of customers on stage with us today too, including Microsoft, Meta, Oracle, a number of new AI companies, as well as all of the major OEMs, and everyone is excited about MI325 and the roadmap ahead.
And yet, shares closed down 4%. The disappointment is not in the long term, right? You updated the forecast for the market, $500 billion in 2028. But what can you tell me, or how can you quantify the near-term demand of those new customers that you just outlined?
Well, the best thing to say, Ed, is this is an incredibly fast-growing market. I mean, if you think about, what we've done just over the last 12 months or so, we've seen MI300 demand increase from when we started the year to, in our most recent earnings, we actually said we would be over $4.5 billion in this important AI accelerator market. We view this as a multi-year opportunity for us. And what's really important, what our customers say is, we've shown that we have excellent hardware, but even more importantly, we've made tremendous progress in the overall software roadmap. And what that allows is customers to get to market, as fast as possible. So we're seeing, with MI325, we expect the new chips to be anywhere from 20 to 40% higher performance on key inferencing workloads than the competition, and that's a great place to be.
Lisa, describe the demand for your AI products in just a single word.
Amazing.
Give me more than that. How is this different to a year ago? You remember us sitting in San Jose, right? We were sitting together, and it was the start of a very different time in the investment cycle. How is it different now?
Well, I think, so in a single word, the best thing to say is it's an accelerating market. And, what we see is so many new applications, so many new opportunities to use AI. We're at the very beginning of the cycle. And one of the things that I've been very, very encouraged at is, when we started maybe 12 months ago, you would see that, there would be a lot of people trying things, but it would actually take them a while to cut over to their production environment. That's actually much faster now. And what that means is, there's more demand for AI capability, but we've also significantly improved our tools and overall software infrastructure. We call our software suite something called ROCm. And it has just made tremendous progress over the last 10, 11 months.
That was the AMD CEO, Lisa Su, speaking to Bloomberg Technology co-anchor Ed Ludlow there. And even though Lisa Su said the demand for the products is looking amazing, it does seem like investors were really waiting for more details here, because we didn't really see any sort of big changes to the near-term financial outlook. The stock dropped intraday, after hours. It's just fractionally firmer here, but still, suppliers to the company aren't really doing too much. And actually, Shery, they're mostly to the upside.
Yeah, take a look at the picture in Japan because it's a little bit mixed. We have 7 and 9 now falling. They cut their operating profit outlook and they unveiled a plan to split into two. So you have that downside of 2%. Fast retailing rising as much after their forecast beat estimates. We also had earnings results from Matsuya, so we're seeing a little bit of a reaction there. But do keep an eye on Kansai Electric. They've said that one of the nuclear plants has a tiny hole in a pipeline, so we'll continue to watch that stock, which is losing about 0.7%. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. The Bank of Japan deputy governor says the central bank will stay on its path of rate hikes and unwinding easy policy if the economy performs in line with projections. Ryozo Himino comments is the first by a board member since new Prime Minister Shigeru Ishiba warned against another rate hike. Himino told a Bloomberg event in Tokyo that the BOJ can improve its communications after its July rate rise surprised traders.
There is no silver bullet in better communication. Each approach comes with pros and cons. And I would say that there is no clear consensus yet among board members about which approaches to pursue. But I can testify that there is a strong will among us to learn from what happened and continue to try to do better.
Also at that Bloomberg event, former BOJ Deputy Governor Masazumi Wakatabe emphasized the importance of the central bank's data-dependent approach to policy. He joined a panel discussion with former BOJ Executive Director Kazuo Moma and JP Morgan Securities' Rie Nishihara.
Now Japan is at a critical sort of juncture. So we are at the sort of the critical phase. Going from moving away from deflationary, stagnant Japan to newly emerging sort of mildly inflationary, growing Japan. So that's why you are here. That's why you are trying to sort of report what's going on in Japan. So that's my general point. I think for specific points about the totality of economic data, I think you cannot argue against that totality because as a former deputy governor of the BOJ, the communication is very, very tricky. Yeah, suppose I say, that's, I'm just looking at the inflation expectations. Then, the people just take a look at market participants will focus on inflation expectations. But I think that he has given us some hints. And we are going to talk about the future course of the BOJ action. My sense is that Himino-san is confident about BOJ's predictions. Okay. It's right or wrong. So that's the big question. Yeah.
So it's really interesting, even during his comments, he even mentioned the pass-through of the level of the yen into the inflation outlook and into what the BOJ is going to do, right? So let's sort of try to gauge where at least private markets and investors think that the yen will go. Nishihara-san, you want to take us there? What is JP Morgan's view, for example?
Yes, JP Morgan expects dollar yen. Farthest is September next year is 139. So it will be like something like 138 and 25th. 25 end is the point all market focus because by then Fed's rate cuts will be mostly done. So now today, that in forward curve, the dollar yen pricing in at the end of 25 is 142. And on the date of sell-off on August 5th or mid-September, when Japan equity markets face challenge, the Nikkei was 36,000 at the time. The dollar yen in the market and 25 is 135. 134. So today, it's the market gets much, much better in terms of the sentiment. We had preemptive FRB. The Bank of Japan's communication sounds like very dovish in September. Communication is tricky. Also we had a good US payroll, right? So dollar yen matters. And looking back at equity markets after July 31st, we are actually coming back to the same level. 40,000 Nikkei today closing level is exactly the very close level before the July meeting of the BOJ.
Which, of course, wreaked havoc to yen carry trades, and then we had the yen really soaring. But really, Moma-san, let's talk a little bit about the importance of the currency for the BOJ, because even in their statement last time, they said that it would have more of an impact than before.
Yeah, actually, Himiro-san earlier didn't tell anything about exchange rate. That is the dishonest, actually. What actually found out very interesting in the last press conference by Mr. Ueda, Governor Ueda, September meeting, actually he said U.S. economy 17 times in a 60 minutes conference. So every 4 minutes, he said U.S. economy. He is talking about Japan's monetary policy, but he still reveals to prefer actually mentioned U.S. economy. That's exactly revealing how much BOJ is concerned about the external development, which could affect exchange rate. Actually, a July rate hike was motivated by very weak yen. I think probably 80 or 90% of the motivation was weak yen at that time. So since then, after the August turmoil, BOJ suddenly changed the tone. No wonder, because the yen was 140. So now the yen is approaching to 150. So I think that will put BOJ in a very delicate position going forward. So if the yen further weakens, 150, 155, and people are starting to complain about the weaker yen and higher prices, I think that will actually prod the BOJ to move forward the timing of the next rate hike.
Some of the views from our Bloomberg event navigating the new Japan in Tokyo, and those comments from Kazuo Moma are really coming at a time when we're seeing the Japanese yen now push towards that 150 level. We're steady at the moment, given that we have seen a little bit of strength in the overnight session on that data, a mixed data, a batch that we got from the United States. But really, given the rate hike back in July, when the yen was as weak as almost 162, we'll continue to watch where the Japanese currency goes from here as we keep seeing stocks being supported on that weaker currency, Bell.
Yeah, and of course, keeping an eye out in Japan on the retailers this morning as well, because we're seeing some pretty mixed fortunes so far in trade about 40 minutes into the session. Of course, very different drivers as well. We're watching, for instance, Fast Retailing. That's the owner of Uniqlo. And we actually saw in their latest earnings strong sales figures and growing demand from North America, Europe, and the rest of the APAC region. So they've lifted their operating profit target for the current fiscal year to 530 billion yen. So that really surpassed analyst estimates. That stock is high today. The other one that we're watching very closely is what's happening with Seven & I, because, again, the big focus on what are they doing in terms of defending or fending off that buyout proposal from Couche-Tard in Canada. Let's get more on that now with our Global Business Asia editor, Peter Verco, joining us more on the Seven & I overhaul. And Peter, just talk us through the details of what was spelled out yesterday from the company and whether you think that's enough as well to fend off these buyout efforts.
Yeah, good morning. Yeah, so Seven & I came out with quite a radical overhaul of its business yesterday. It's planning on separating out its main convenience stores and gasoline stations into a separate standalone business and spinning everything off. And there's like 31 other businesses, and that ranges from its bank, its supermarket operations. It's even got Tower Records Japan in there, and spinning those off into another business that eventually will be separately listed. The view has been there for a long time that Seven & I would be worth more, or the convenience stores would be worth more as a standalone business. Some activist investors have been pushing for that. So it does seem to be that this is Seven & I's response to try and fend off this unsolicited takeover offer from Couche-Tard. But the other side of that is that Seven & I also downgraded its profit outlook for the coming fiscal year, and that suggests that that there's some weakness in the main convenience store business as well.
Yeah, I mean, we got those earnings from the retailer, and we're now seeing that they cut their operating profit outlook, right? So what's likely to be the next when it comes to the takeover battle?
Yeah, well, it will be really interesting to see where this goes. Bloomberg had a story earlier this week that that Couche-Tard made an increased offer last month that hadn't been made public yet. There was about a 20% increase from its initial offer, and that's it is now pitched at about a 50% premium to Seven & I's share price from before the first approach was made public. Now that's getting into pretty attractive territory for some shareholders who at the very least would probably like to now see Seven & I start to engage with Couche-Tard. Seven & I has not made many public comments about this. It's playing its cards very close to its chest about how whether it's going to engage or open its books to Couche-Tard. So the next step will be really to see whether we get some of that engagement, whether Couche-Tard has got some more money or some more ammunition in its war chest. Again, we had a story earlier this week out of Canada saying that it could probably go another 10%, but then would really be starting to push up against where there wouldn't be much value left to extract from a takeover offer. The shares have fallen again. Seven & I shares have fallen again in Tokyo trading this morning on the back of all this, probably on the profit downgrade as well. But they're trading well below the offer price, which is maybe also a suggestion that investors don't see a deal going ahead at the moment.
Yeah, Seven & I has been been seen as one of those companies in Japan that could lead to sort of a cascade of other companies having to reform. But at the same time, we have seen them try to really fend off this offer so badly, including with core business designations coming from the government. What does this sort of tell us about the broader trend that we might see here in Japan as it pertains to Seven & I and where this goes from here?
Yeah, I think that's really interesting, and it's a fascinating thing to see play out. Japanese government has really been pushing for, sort of clearer and better corporate governance at companies, the unwinding of cross-shareholdings and trying to open up companies. And this is the first real test that we've seen. It would be, if it went ahead, the biggest foreign takeover of a Japanese company. It's about $47 billion now. And 7-Eleven, is really seen as it's a very well-known Japanese company. It's got a global presence. But the way that 7-Eleven or Seven & I has engaged or not engaged, as I said, it's been playing its cards very close to its chest. It's got this now core business designation that really seems to be a way that it is trying to fight this takeover off. It doesn't seem to be willing to engage at the moment. And if this doesn't go through, then, what does it say? Is Japan still closed for business for foreign takeovers?
Right. Bloomberg's Global Business Asia editor Peter Virgo there. These are some of the other stories that we're following right now. Berkshire Hathaway has trimmed its Bank of America stake below the 10% regulatory threshold, requiring rapid disclosure. A selling spree that began in mid-July has helped Warren Buffett's firm reap about $10.5 billion from its years-long investment in the bank. Berkshire now only needs to provide quarterly updates on its holdings. Taiwan says Chinese police have detained 4 Taiwanese Honhai workers in Zhengzhou, where the company operates the world's largest iPhone assembly plant. Taiwan's Mainland Affairs Council says police detained the 4 on charges of breach of trust. Taiwanese media say the arrests happened earlier this year. Taipei says it may be a case of local police abusing their power. BlackRock and Singapore Sovereign Wealth Fund GIC are set to be among bidders for stock in Hyundai India's $3 billion IPO. Sources say the record-breaking listing is also attracting other local and international institutional investors. The price range for the IPO has been set at around $22 to $23 a share, with the parent company selling over 140 million shares. Tesla will unveil its long-awaited driverless Robotaxi prototype later today. CEO Elon Musk is expected to reveal a functioning Robotaxi called a Cybercab and provide details about a new business model on autonomous driving. Sources tell us that Musk will also talk about plans for driver assistance features and the company's humanoid Optimus robot. Stellantis is replacing its finance chief as part of a broad management overhaul as it tries to regain investor trust and stabilize its business. CFO Natalie Knight will be replaced by Doug Osterman. Knight joined the carmaker last year and faced backlash over recent profit warning and an admission the company's full-year margin target was ambitious.
Taking a quick look at how European futures are opening this morning, and they're looking a little bit firmer so far in the session. But remember, of course, overnight the story was that reaction to the US inflation print, and we did actually see stocks sort of faltering somewhat because of investors really questioning where does the Fed go next? Are we looking at a hold at the upcoming meeting? Could we see perhaps a smaller cut coming through as well? Futures, though, here just some modest gains so far in the session after, again, we saw them faltering intraday on Thursday. But we'll have more ahead on the Asia trade. This is Bloomberg.
From the Fed's perspective, look, if the economy's in good shape, we can just gradually bring rates back to a normal level.
The Fed is on an easing path, and I think that's what's important. If you look at the distribution of what's being priced in the SOFR market or the futures market, traders and investors are really thinking, okay, the Fed is protecting the downside here.
We're not sure the Fed has everything under control the way that they want to, and that is a risk. The last thing the Fed wants to do is stoke those flames of inflation, have that move higher as we head into the end of the year, and have to actually raise rates again.
Inflation is still slightly above the target, but is falling. And the fact that it's actually not falling as much is a signal that economic growth is actually not even a soft landing scenario, but maybe in a no landing scenario.
There were some of our Bloomberg TV guests reacting to the latest US inflation print. And yeah, it came in a little bit higher than forecast. And we did see some slight weakness on Wall Street overnight. But so far in the Asian session today, we're actually seeing stocks moving here to the upside. What else is important to note out of this is really just trading volumes, because checking those, we're actually trending off our 20-day moving averages. So it's maybe that question as well. A lot of investors are waiting to see what we get from China's finance ministry on Saturday and what's sort of detailed in the stimulus announcements there as well on the fiscal front, and how much we're going to see injected into the economy and in what way. So it's that digesting of the US inflation print, what it means for the Fed, the expectation around China, and of course, it's that big watch on what could be coming in just a few minutes' time from now, and that is the Bank of Korea decision. The Bank of Korea, of course, it's widely expected to cut its benchmark interest rate today, and that's after inflation eased below its target as well. With us now is Kathleen Oh, Chief Korea Economist at Morgan Stanley. And Kathleen, I mean, we've surveyed around 22 people for this, and 20 are saying that we're going to see a cut today. It does seem like the stage is set here.
I would say you're right. The macro environment has come very conducive to a rate cut this month. I would say the inflation, as you mentioned, has come below the target. The domestic consumption had been showing signs of a slowdown for a couple quarters now. So it's about time that the BOK focuses on the domestic consumption and support the economy.
Are there any sort of risk to that outlook, though, as well? Because there's also that question, maybe they want to see more evidence that we've seen sort of household prices coming under control, and that question around household debt as well.
Exactly. That's exactly what we saw back in the August meeting, when the governor sounded very cautious around the household debt potential reacceleration and not to reignite the sentiment in the housing market by giving strong signal for a rate cut. And it's very understandable that the BOK would be very concerned about that. We saw the housing prices go up very recently. And
We do have the Bank of Korea right now
the
coming out with its decision. It's cut its key interest rate to 3.25% from 3.5% as expected. 20 out of the 22 economists that Bloomberg has surveyed were expecting this cut to come, including, of course, our guest Kathleen. So we're now at a rate of 3.25%. And this would really be the first move since early 2023. Remember, that was the last time that the Bank of Korea moved back in January, and it was really to do with housing markets cooling down finally and inflation easing below its target. We got, of course, those August inflation numbers and the headline slowing down to growth of 1.6% for the month of September year on year. So, Kathleen, going back to you, this came out as expected. I do wonder, though, if there are still concerns about more upside surprises when it comes to inflation, because I just mentioned that the latest headline inflation number had slowed down, but we actually did see core CPI actually picking up.
You're right. The headline inflation came down low, 1.6% for September, and that was even lower than our pretty sub 2% week forecast of 1.9. And there is certainly a concern to the upside risk, unexpected rise in oil prices or sudden risk around the currencies in case of a U.S. elections and very unexpected market moves there. But on a trend basis, we do see the inflation coming down in the very core parts of components of the basket. And we do have the base effect pushing down on the headline until November. So even if we do see a rebound, it's likely to be a mild, just hovering around 2%.
Yeah, Korean 3-year note futures holding gains after the rate cut. We're also seeing the Korean won actually gaining 0.3% against the U.S. dollar. And you mentioned the risks around the currency. Of course, we have seen weaker Korean won, almost 3% against the greenback since their last decision on August 22nd. But I guess the question is now, when could we expect the next move? We have one more rate decision coming up for 2024, Kathleen.
You're right. We have another meeting, the last meeting of the year, in the last week of November. And on that meeting, we're expecting a no change. I mean, we certainly had a move by the BOK first time in 22 months since they delivered the hike back in January. And this move came on a very cautious note. So during the press conference this morning, we're expecting Governor Ri to deliver a very hawkish comment relatively. We're expecting it to be a hawkish cut, not signaling a near-term move to further put the control under the household debt situation and also the sentiment in the housing market. So certainly for the November meeting, we think it's going to be a hold decision.
What else can you tell us about your expectations around forward guidance? Do you think we're going to see that split perhaps already on the board sort of widening somewhat?
I think for the forward guidance that the BOK had started to discuss this year about how many members are expecting a move in the next 3 months is very interesting because this decision came today without a dissenting vote in the last meeting back in August. So now clearly BOK is shifting to a new communication, new guiding system that they're moving on to such thing called as Korea dot plot. And in that, we are expecting the divide between the members to certainly have become more widened, as in the more members, at least 4 to 5 members, likely to see a hold decision in the next 3 months.
To be fair, I mean, despite not getting dissents, when it comes to this board, it seems that we were not necessarily expecting that divergence in views. A lot of analysts had said back in August you could get the cut even if we didn't get any dissents. But then what happens next, I guess, is the question. If we do see the Fed also continuing to cut rates, how does the global easing cycle factor in here?
I think the positive thing about Korea's economy right now is that it can focus on the domestic situation in a very paced manner. BOK certainly had made rate hikes back in the hiking cycle, but it has not made that much of a magnitude closer to the Fed. So while the Fed makes a cut, we're expecting 200 basis point in the whole cycle. BOK, but also can pace that with only 75 or 100 basis point of a rate cut, given that the hiking magnitude has not been as large. So the global easing cycle is a positive backdrop that could provide an easing of the pressure on the financial conditions globally, but because of that, Bank of Korea could also focus on the domestic situation, and its pace can go with the domestic consumption and supporting of its economy at its own view, less affected by the global situation.
All right, Kathleen, thanks so much for your time this morning. That was Kathleen Oh, the chief Korea economist at Morgan Stanley. And of course, recapping that decision, we've seen the Bank of Korea cutting the key interest rate to 3.25% from 3.5%, joining the global easing cycle. And you can also turn to your Bloomberg for more on the BOK decision. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. That's it from the Asia trade. The China show is next, and this is Bloomberg.